There was an assumption several years ago that we were about to enter a rapid period of energy transition, that we'd be driving, as we were talking a second ago, electric autonomous cars, and we'd be powering with our homes with solar and other renewable resources. You actually think that we're entering a fairly radical change in how energy is used and delivered around the world, but it's a time frame issue. You don't think that this is going to happen immediately, do you?
Well, I think it's happening now, but I think if people have the expectation it's going to happen completely over the next few years, they'll be disappointed.
What's your time frame?
You know, we have a 20-year horizon. When we created this business unit within Goldman Sachs, it was a new vertical within investment banking. I said to the executive office, we have to take a 20-year view. It's going to be incredibly volatile in the early years, and it was. We founded this business in 2010. But if we take a 20-year view, good things will happen. And that's really panning out. Having said that, I think you've also heard me say that we're at a tipping point. So some of the technologies that 4 years ago were not competitive with other technologies, traditional technologies, are now competitive today.
Give me an example.
Well, let's start with solar. Solar, you know, $100 a watt in the 1970s, when people still first started putting solar panels on the roof. Now it's going to be, going from $5 a watt last year to $3 a watt in 2016. So even without the ITC, which is a subsidy that I'm sure most people are familiar with, it will be competitive with the grid. LEDs. Bulbs first came out, $100 a bulb, $60 a bulb. You can now buy one at Costco for $3, $4, $5, $6. Will last our lifetime and use a fraction of the energy of incandescent bulb. So I think these technologies are being very rapidly adopted.
There's been a lot of talk recently that the early stage, the venture capital, the angel investor stage has really dried up, and that there hasn't been much money going into that. Do you still, or at least that was a big discussion last year here at Economics. Is that still the case?
I think perception sometimes lags reality by 6 or 12 months, and it certainly over the last couple of years has been a topic of discussion. And if you talk to the venture community, if you talk to them last year, they would say many things in their portfolio had not performed as well as they would have liked. And it's harder to raise new funds when that occurs. Fast forward 12 months. Nest was bought by Google for $3.2 billion. Every venture investor that was invested in Nest did extraordinarily well. O-Power has been marketing the last couple of weeks. Tonight, they priced their IPO. Anyone invested in O-Power, which is in the efficiency space like Nest, did extraordinarily well. We took Tesla public in 2010, and we've raised over $4 billion for them since then.
We've had
all of those have been very big successes.
And so is that drawing people back? I mean, are venture capitalists getting excited again? In terms of real money, are we starting to see it flow in to create and fund the next generation of Nests?
Yes. It will take some time, because whenever you have carnage, it takes some time for people to get past it, and you also need to have visible success for people to be comfortable to jump back in the water. But we've never been busier. We just completed 3 offerings in the past several months in this space. Over $2 billion for Tesla, financing for Solar City. We just did a financing for Solazyme, which is in the bioproduct space. We just completed a private placement, $100 million for a distributed generation company in the solar space. 2 weeks ago, we just priced Cool Planet, just did a $100 million private placement. So, this is all happening in the matter of the last several weeks, if not months.